haven't done this in a very long time. I said, let me go and talk to these people about this so y'all can stop calling me and texting me and all the stuff. So here I am. So I'm going to let some people jump on really quick. Gonna have some people jump on really quick and really get into this. Hey y'all, how y'all doing? It is good afternoon. Hi everyone. I want to let some people jump on really quick because I need to get through this because I got some things I gotta do today. But I wanted to talk to you all about this Bank of America loan that's floating around here. All this drama. Y'all really pressed about this Bank of America loan. Some are pressed, some are triggered, some are excited. It's really funny how you all react to this information. But I want to really kind of dissect everything as much as possible because I think when we do better when we have the right information, not just the information, right? So we're going to make sure you share this video with people because I think this is important. I always say share it with your family, your friends, and the coworkers that you like. So we can go ahead and get all the way into this. So I don't want to take up too much of everybody's time because I have to prepare to moderate a mayoral candidate tonight for the city of Oakland. So I have to get my notes and things together. So I don't want to take too much time of this, but I really wanted to talk to you about the loan that Bank of America announced today. Not today, they announced it a couple of days ago. But you all are starting to hear it, and then I'm getting all the texts and the DMs, and I wanted to kind of break down what the loan is, and then I wanted to talk to you about whether or not I like it or not, and then whether or not, like what can you do from here? Like the loan's out, now what, right? So I wanted to kind of give you all the information I think that you all can use because many of you just are looking at the headlines and nothing else in between that. So I wanted to give you a little bit more about the headlines and really what this means for the borrowers who this may impact the most. First and foremost, let's just get into it. So Bank of America announced that they have a 0 down payment loan that is specifically for first-time home buyers. What's a first-time home buyer? First-time home buyer is somebody who has not had a property in their name in 3 years. So if your name is on your husband's loan, on a property that your husband owns or your grandmother owns or a family member, or if it's on any type of a property, you are not considered a first-time home buyer. If you had foreclosed on a property 5 years ago or whatever the case may be, and you are trying to get back on your feet, you are still considered a first-time home buyer. So whether or not you've owned in the past, you are still considered a first-time home buyer. So 3 years is if you have not owned in 3 years. So you could have sold a property 3 years ago, and now you are considered a first-time home buyer all over again. Look how that works. So it's designed to increase Black and brown home ownership. Now I have to tell you that I've been telling myself that I wasn't going to have conversations about all of these programs that are like CRA programs and what we call community revitalization programs and down payment assistance. Those really aren't my clients anymore. But I really wanted to make sure that I got the information out and got it out appropriately and properly. So you all have the information that you could use and then take it and run with it. So again, these are programs that are we've been seeing the headlines say, these are for Black and brown borrowers. Yay, right? Everybody's like, either people are mad or people are happy. I don't know what to say about y'all. It's a mixed bag when it comes to information. So I don't know how to take it with you all. But this is what it is. So let's be very clear that this is not necessarily for minority buyers. This really impacts minority communities. So you do not have to be a minority buyer to take advantage of this property, but you have to be buying in a minority community. So let that sizzle in your spirit a little bit. Although, you know, the assumption are minority buyers live in minority communities, that's not necessarily the case. Many times when we're looking at evolving communities, like for example, West Oakland, which had been for many years predominantly Black, we now see it evolving into something else. And at one time, the West Oakland would have probably been predominantly in the census tract used to allow this to be a viable program to use in that area. Is it now? No, because the census tract doesn't support it. So just make sure you're very mindful of that. This is not for minority buyers, it's for minority communities specifically. So you have to be in a certain census tract. So you can't be a Black or brown person that's buying in a community that doesn't fall in the census tract. And you have to also understand that just because you're a Black or a brown buyer, you don't automatically qualify. So let's be very clear on what some of the requirements are. It does allow you to use untraditional credit, your rents, your auto insurance, your utilities. What we know that for entry-level buyers, sometimes that having a credit profile sometimes doesn't even exist. So it allows the bank to qualify borrowers based on untraditional credit profiles. I mean, that's not a bad thing. You know, for years, reports have gone out to say that there are borrowers who are from minority communities who are credit invisible, and they responded to that in this way. It requires no mortgage insurance or minimum credit score. That is true. This program is very similar to what we've been hearing around with NACA. Now, is it going to be a program that they run through NACA? I don't know. You better pray that they don't. Or else you'll be in line with NACA for 2 or 3 years just trying to get a pre-approval. But yes, it does not require a minimum credit score. It does not require, it doesn't have any PMI. But you do have to take a home buyer's certificate course, which is a HUD with the HUD housing counselor, which is not unusual either. So now that we've gotten through all the specifics around it, I really want to talk about where this is going to be launched. So Bay Area people, you guys can't use none of this because it's on trial in, I think, 8 or 9 different locations: Dallas, Detroit, Los Angeles, Miami, Charlotte, North Carolina. So Bay Area people, you guys are SOL. You guys don't get to use this at all. So why am I talking to you if I can't get people in it? Well, first and foremost, let me just tell you that we've been getting people in 0% down credit, programs for years. When I say years, I mean years. This is not new for me, and that's why I am very shocked at the amount of hype that it's created. We've been putting people in 0% down programs for years. Matter of fact, they're not even 0% down. The borrower has to come in with 0%, but there's actually a down payment that it actually exists in the absence of the buyer. We've been using programs that will come in with down payment assistance that will cover your closing cost, most of your closing costs, not all of them, but most of them, and your down payment for like years. Like this is an anomaly for y'all. Bank of America put their PR engines behind this and made a whole bunch of noise. But the fact of the matter is many communities around the country have down payment assistance programs or homebuyer assistance programs that will allow you to do the exact same thing as this. We don't have the luxury of being able to use this program right now in the Bay Area. But there are other options, and I want to make sure that you understand. Just because they're all in these different markets does not mean that you still can't enter into this market with the help of a down payment assistance program. We have tons of them. They do just this. just this exact thing. Let me tell you what I don't like about 100% programs. I don't like 100% programs because you have no skin in the game. What does that mean? So when the market changes, if there's any type of economic shift that it directly affects homeowners, it's going to affect you first because you have no equity. You will literally walk into your home with zero equity. And then as time goes on, yeah, maybe you may appreciate a little bit. But at the end of the day, if a market starts to reset itself, it affects the people with 0% down first. And so it makes things very hard if you're trying to refinance, if you're trying to find a way to leverage your home to pay off debt. If there's a way for you to leverage your home in that way to refinance, you absolutely cannot, because you are the one that was hit first when it comes to market values. The other thing that I really am not fond of is the fact that everybody thinks that this is really supposed to be very targeted and making sure that it increases Black and brown borrowers. But at the end of the day, anybody can use this product. So if the real work doesn't happen to make sure that we're present to be able to move the dial on this, the real support is making sure that people are prepared for home ownership. I personally think that you should not count on a program like this to try to get you into the doors of home ownership. Home ownership is not cheap. You need to be able to make sure that you are disciplined enough for a down payment. You are disciplined enough for your closing costs. You are disciplined enough to be able to have reserves in the event that something happens to your home and you need to be able to fix it. That requires discipline on your part. The process around buying a home is not about how you can quickly get into it. It's about how you can sustain it as an asset so that when you want to be able to leverage it for whatever purpose you need to in the future, whether it's for a refinance or to sell it for whatever reason that is, you have the ability to do so because you've learned how to sustain an asset. So that's why I particularly don't like this whole conversation around 0% down. Now, listen, your girl knows how to negotiate a dollar or two when it comes to buying a house. The one thing I will tell you is the down payment assistance programs that we have now will give you a down payment. They will give you some of your closing costs. But if we really did the great amount of negotiating that we did, we can likely go and then, depending on which market you're buying in, we can go in and help you negotiate for seller closing costs and have you not come with anything at the closing table at all. Sometimes our buyers walk away with a check. That's right, they walk away with a check. So, we have to be very mindful about what we start putting our energy behind when it comes to the announcements of these programs with these banking systems, because that's what they are. They're banking engines. We always say that we have to put you with lending professionals that work the best for you. You may get tied into a big bank like a Bank of America and get lost in the sauce. Whereas some of our smaller lenders who are brokers or smaller lenders who are boots on the ground, or even our relationships that we have with bigger banks, we have direct relationships with those banking people. So we know exactly where their heart is, regardless of the bank that they work with. So just keep that in mind. The underwriting is not going to be fun on these 0% down. I could tell you that if in fact the underwriting starts becoming a problem, and if the underwriting starts affecting your ability to close, I can wholeheartedly tell you that there's going to be agents that look at the pre-approval and go, oh, it's one of those loans? No, we're not going to deal with it because they're a pain in the ass to close. So be mindful of these type of loans. They sound great when the press release comes out, but how functional are they when it comes to actually getting them to the closing table? Now, I will also tell you this, because, you know, you all know that NACA is not my favorite thing to even talk about, because I think it's a very dysfunctional process. They have a dysfunctional process. That is a fact. I don't care who went through NACA and got what. The average person is literally uh, uh, going through the motions of trying to get into the most anxious process of just getting a pre-approval letter when they're going with NACA. So I pray that they don't run this process through NACA, because you might never get anything. But for those people in the Bay Area, like, we do this all the time. Like, we have options to do this, and this is why I specifically talked to one of our lending partners here recently about going out and doing home buyer workshops. And you don't see me out doing home buyer workshops. I don't even be on these lives talking about home buying very much. But what I will say is where there's a need and where there's an opportunity, I'm going to tell you all about it, because I think that this market is a softer market, and it gives people the again, I'm going to use that word opportunity a lot, because that's where we're at when it comes to home ownership these days. I think people have the ability to enter into this market than they a better chance into this market than they did April, for sure. So you can absolutely thank the feds for that. But at the end of the day, I want you to make sure that you are educated, you have an understanding, and then that you are sustainable in doing this. Again, that takes dedication, hard work, and an understanding of your priorities. So going in and saying, I only am going to come in with a rental profile of my rents, a credit profile of only my rents, my car notes, my utilities, my auto insurance. The same work it takes for you to make sure you have all that intact is the same work that it will take for you to make sure that you have a credit profile intact, to be able to show that you have sustainable credit profile, that you have character, that you have credit readiness, and that you have the ability to pay on time. It's the same thing. So don't let these people fool you with these nice public relations and press releases and all that kind of stuff. Come see us. I'm going to leave our information in the chat. So if you want to book a consultation, we're still here. We're still working with buyers. We're getting about 5 to 8 buyers into contract a month. It's that kind of a market. And we're that kind of a sales team. And we have the ability to give you the understanding of where the resources are, with even needing for you to wait for them to come to our market. So with that being said, like I told you all, I have to get prepared for this to moderate the mayoral candidate tonight. But I wanted to jump on with you and kind of get you all going on what this looks like, what this sounds like. I do think you'll get a higher interest rate, but that's not uncommon anytime you deal with down payment assistance. So if you're dealing with a concept of where the rate of the day is 4.5%, you are probably looking at an interest rate of 5.5%, meaning that you're going to afford less. So if that being the case, if it becomes an issue around affordability, then it's probably in your best interest to go and just save the money and do the work. Just save the money and do the work. It sounds hard. It sounds daunting. But that's the case for any down payment assistance program that you're going to be in. Do you think that the money is just free? Do you think it doesn't come at a cost to anybody? When they say the house always wins, they meant the bank. So you have to just be mindful of all of those things and how they impact you. You know, this is something that we do every day. You know, this is something that we do every day. We breathe real estate. So if you really want to get in contact with us, if you want to understand how to navigate this market, markets are very regional. The markets you have to be in it to really understand it. I can tell you that I'm closing on a property, $550,000 with 2 houses on it. One with a renter already in the second house. So the deals are existing. And somebody said, where is that at? It's in Maleo. And so the deals exist. You have to be open to the opportunities. You have to be ready, willing, and able. So don't wait. Whatever you do, do not wait. Because what we are seeing in this market is people are becoming more comfortable with where the interest rate is right now. They're starting to get out there and shop. I told you we put 5 to 8 buyers in houses every month. Do you think our buyers are waiting? Do you want more than one Shawneequa and her team out there letting you know that there's going to be more competition? And there's some of you that are saying that I want to wait until the interest rate goes down. And at what cost? Because if the interest rate goes down, then it's likely that it's going to be at a cost somewhere. So I'm going to leave my contact and information in the chat. If you'd like to make an appointment, you're more than welcome to do that. I think I can do that like now. Let me see. Let me see if I can do this. You know, it's been a while. I said I'm going to chop it up. I'm going to chop this up I'm going to chop this up different for Instagram. You know, them Instagram people do different things different. They like reels and stuff over there. So if you have any questions, let me know. But that's the scoop, y'all. You know, just relax. We do this all the time. If you really want to get into the market, quit playing around. Don't wait for Bank of America to do it. Reach out to us and we'll get it done. With that being said, I'm out.